Okay, so good afternoon, everyone. And we will discuss this afternoon our module 2, which is about financial statement analysis and ratio analysis. So, for this lesson, I want you to remember one important idea. Yung financial statements, they are not useful simply because they contain numbers. They become useful when we know how to interpret those numbers. So, kapag tinignan natin yung balance sheet, income statement, or even cash flow statement, lahat ng mga financial statements, makikita natin yung iba't ibang amounts, 'di ba? Yung figures, yung numbers. Pero ang question doon is, what do these numbers actually tell us about the business or about the company? So, for example, if yung company, meron silang 5 million pesos in assets, for example, is that automatically good? We cannot say, well, not necessarily it's good or we cannot say it's bad. Kasi we also need to ask how much of those assets ba are financed by debt? Or yung company ba na yun, are they able to pay its short-term obligations? Or is it earning enough profit? Or is it using its assets efficiently? Or from the investor's perspective, is the company worth investing in? So, doon papasok yung financial statement analysis natin, which is napaka-importante. Sa module na ito, we will explain that financial statement analysis involves assessing the viability, the stability and profitability of a business using information from financial statements and other financial reports. So these analyses are commonly presented to top management as a basis for decision making. So next, we before we proceed, let us look at our learning objectives. So at the end of this module, you should be able to first identify the nature and objectives of ratio analysis. Second, determine the ratios used to evaluate short-term solvency. Third, determine ratios used to evaluate long-term solvency. Fourth, determine ratios used to evaluate operational efficiency. And finally, determine ratios used to evaluate I'm sorry. Fifth, determine ratios used to evaluate profitability. And finally, determine ratios used in investment analysis. So this chapter is not simply about memorizing the formulas, but our goal is to understand what each ratio means and what it measures and how we interpret the results. Ang importante dito, we just don't memorize the formula. We should understand the story behind the formula. Okay? So what is financial statement analysis? So, let's start with the basic concept. Ang financial statement analysis, it refers to the assessment and evaluation of the viability, the stability, and the profitability of a business or project. So, in simple words, financial statement analysis, it helps us answer the question, gaano ba ka-healthy financially ang isang business or ang isang company? So, parang kapag 'di ba nagpapa-check up tayo sa clinic or sa doctor, hindi lang sapat na sasabihin lang ng doctor na yung blood pressure mo ay 120/80. So hindi lang ganoon, 'di ba? The doctor will also interpret the number in relation to other information. So ganun din sa negosyo or sa mga companies. We don't just simply look at sales, assets, or liabilities, or income separately. We analyze these figures to understand the overall condition of the business. So, for example, kunwari yung isang company, they may report high sales, mataas yung sales nila, but If it's kunwari yung expenses nila ay masyado ring mataas, then yung profit nila ay mababa pa din, 'di ba? Or let's say another company may have high profits but very little in cash. So that can also create problems kasi the company may have difficulty paying its immediate obligations. So yung analysis, it gives meaning doon sa mga numbers. Okay? So, for our objectives, ano ba yung mga objectives ng financial statement analysis? So, there are three major objectives of financial statement analysis. The first one, mababasa nyo dyan, is financial and management decision making. So, financial statement analysis helps us evaluate a business entity for financial and management decision making purposes. So, para sa mga managers, the information can help them decide whether they should expand, they should reduce their expenses, or do they need to borrow money or manghiram ng pera? Do they need to invest in assets or change their business strategies? Ang second objective naman is profitability and risk. So, ang financial statement analysis, it also examines profitability and risk, particularly doon sa short-term and long-term liquidity. So, in simple terms, kumikita ba yung kumpanya at kaya ba nitong bayaran yung mga obligations nila? So, yun yung pinaka main point ng profitability and risk na objective. And number 3, or the third objective of financial statement analysis, financial statement analysis measures the firm's operational efficiency and the investment provided by owners and creditors. So, we want to know, gaano ba ka-efficient yung management in using their resources entrusted to the company? So, remember these three ideas: decision-making, profitability and risk, and operational efficiency. Ito yung objectives ng financial statement analysis. Okay? So, meron tayong different ways kung paano tayo nag-analyze ng financial statements. The first method there na nakalagay sa module is the comparative statement. So, this means we present the financial information for the current period together with information from the prior period. So, bakit? Bakit natin to ginagawa? Because yung comparison, it allows us to identify changes. So, for example, if my cash na 150,000 last year, and then yung cash this year ay 283,000 pesos, we can immediately see na nag-increase yung cash, 'di ba? So, instead of looking at 1 year's financial statement in isolation, we compare it with another period. So, in simple terms, yung ginagawa natin sa comparative statement is yung before versus after. So, kung titignan natin siya, ano ang pagbabago from last year to this year. Okay? Yun ang comparative statements. And sa comparative statements, dalawa yan. We can use the horizontal analysis or the vertical analysis. So, sa horizontal analysis, it presents financial statement analysis on a percentage basis over time. So, dun sa module natin nakalagay, we use a base year, and then the base year is assigned an index value of 100. And then, we compare succeeding years against the base year. So, ang pinaka-basic idea dito, medyo mahirap tong i-discuss sa inyo since wala tayong whiteboard para maipakita ko talaga sa inyo. Pero nandyan naman yan sa module nyo. Ang pinaka-basic idea ng formula is yung current year amount divided by the base year amount, tapos ita times 100 lang to get the percentage. So, for example, dyan sa module natin, makikita nyo, diba, yung cash. For example, yung cash 2014 is 150, diba? Tapos 2015 ay, eto, 283,000. So, if cash was 150,000 in 2014 and 283,000 pesos in 2015, the amount increased by 133. So, paano natin nakuha yung 133? I-minus lang naman natin yung 2015 na amount na cash sa 2014 na cash. So, pag 283,000 minus 150, ang sagot dyan ay 133,000. So, the percentage increase is approximately 88.7%. So, positive ito ha. So, that means yung cash, nag-increase siya by 88.7% from the previous year. So, this is useful because percentages make changes easier to compare. Diba? Makikita natin agad, nag-increase ba siya, nag-decrease sa cash. So, for example, an increase of 100,000 pesos may be significant for a small company but not very significant to a larger company. Kaya, percentages give us a better perspective. So, yung module natin, meron tayong sample problem dyan na PRT company. It shows na yung cash nila nag-increase from 150,000 pesos to 283,000 pesos or 133,000 pesos and 88.7%. While total assets increased by 273,000 or 5%. Nag-increase ng 5% yung total assets ng PRT company. Okay? So, ayun. Makikita natin dyan dito sa solution. As you can see, 88.7, then the total assets ay 5% yung in-increase niya compared doon sa previous year. Okay. So, for the vertical analysis naman, the third method, vertical analysis expresses each item on a financial statement as a percentage of an appropriate base amount. So, these are also called the common size statements. For an income statement, the base is yung total net sales, which is expressed as 100%. So, for the balance sheet, ang base dito is yung total assets or total liabilities and equity, also expressed as 100%. So, if yung total assets are 10 million pesos and yung inventory ay 2 million pesos, then 2 million pesos divided by 10 million pesos equals 20%. So, that means yung inventory doon represents the 20% of total assets. So, ang tanong natin dito is, out of all the total, ilang percent ba ang represented ng iba't ibang particular account sa assets? Kasi diba madami tayong different types of assets. So, that's the key idea behind vertical analysis. Ilang percent ba yung nire-represent nung particular account na yon sa totality nung ating statement. Okay? So, that's vertical analysis. Next, we discuss the ratio analysis. Ayan. Ratio. Okay. Ratio analysis. So, ratio analysis, we use relationships between financial statement numbers. So, instead of looking at individual numbers, we create a relationship between them. So, for example, current assets divided by our current liabilities, this gives us the current ratio. So, why is this useful? Bakit useful siya? Because, for example, 5 million pesos of current assets may sound impressive, 'di ba? Kasi 5 million. But if the company has 10 million pesos of current liabilities, then the situation is very different. So, ang ratio analysis, it allows us to put numbers into perspective. So, dito sa module natin, ini-emphasize na yung ratios are useful because they summarize financial data in a form that is easier to understand, interpret, and compare. However, yung ratios should generally be used together with other evaluation techniques. So, meron tayong 5 major areas sa ratio analysis. Ito, yung ating mga solvency, efficiency, profitability, and investment analysis. Okay, so for short-term solvency, this is the ability of a firm to meet its current obligations as they mature. So, ang tanong dito is, can the company pay its current obligations when they become due? Pag nag-deadline na, pag nag-due, mababayaran ba ng company yung mga obligasyon na yun or hindi? Yun yung short-term solvency. And makikita natin yon using the ratio analysis. Okay? And then number 2, sa long-term solvency naman, this is the ability of the firm to meet interest payments, preferred dividends, and other charges. And long-term solvency is a required precondition for the repayment of principal. So, ang tanong natin dyan sa long-term solvency is, can the company meet its long-term financial obligations, including yung mga interest payments? Kaya bang bayaran yun ng company? Yung mga more than 1 year na mga financial obligations, kasama yung mga interest, kaya ba nilang bayaran or hindi? So, number 3, we have the operational efficiency. So, sa operational efficiency naman, this is the ability of the business entity to generate income and earn a satisfactory return on investments. So, ang tanong natin dyan is, gaano ka-efficient yung company sa paggamit ng kanilang mga resources para maka-generate sila ng income. So, yung mga formula under the operational efficiency, yun yung isosolve nun. Kung paano or gaano ka-efficient yung company sa paggamit ng kanilang resources para mag-generate ng income. Number 4 is profitability. So, ang profitability, from the word profit, this is the ability of the firm to generate income and earn satisfactory returns to common stockholders. So, ang question dyan is, yung company ba or is the company generating satisfactory returns to its investors or not? So, yun ang profitability. And the last one is investment analysis. So, for investment analysis, it measures the total investment provided by stockholders and total resources provided by the creditors. Ang question dyan, this focuses on the investment provided by stockholders. So, as we go through each ratio, we always ask ourselves, what question does this ratio answer? Ano bang tanong yung sinasagot ng ratio na to? Okay? So, let's begin with short-term solvency. So, makikita nyo dyan yung mga formulas na gagamitin natin for short-term solvency. Ayan yung mga formulas. Okay? So, short-term solvency refers to the firm's ability to meet its current obligations as they mature. Ang pinaka-basic term dyan is paano ba mababayaran or may pambayad ba yung company sa mga utang na kailangan nilang bayaran. So, yan yung kaniyang mga formula sa mga ratios. And then, we have, under the short-term solvency, first, we have the current ratio. Ito, yung first, di ba? Current ratio. Paano natin makukuha yung current ratio? We simply divide current assets by the current liabilities. So, for example, if yung current assets ng company ay 2 million pesos and current liabilities are 1 million pesos, that means 2 million divided by 1 million is equal to 2:1. So, anong significance nung 2:1 na yun? So this means that for every 1 peso of current liabilities, yung company, meron siyang 2 pesos sa kanyang current assets. So, pero be careful ha, ang higher ratio is not automatically better in every situation. We still need to understand the quality of those current assets. If it's kaya niyang bayaran yung kanyang mga short-term obligations. And then for the acid test or quick ratio, the formula there is cash plus marketable securities plus net receivables divided by the current liabilities. Yung acid test ratio, tinatawag din siyang quick ratio. This is a more stringent test of short-term solvency. Why? Because it focuses on the most liquid assets. In-exclude dyan yung inventory kasi, yung inventory kasi hindi siya ganun ka-liquid na klase ng current asset. Imagine that a company needs to pay its debts today. Kunwari, may babayaran na utang yung company ngayon. Can the company rely on inventory immediately? Not necessarily. Kailangan pa nitong ibenta yung inventory na yon before ito magiging cash. So that's why ini-exclude yung inventory sa quick ratio. So how much of the current obligations can we cover using our most liquid assets? So remember, your current ratio is the broader measure. But for the quick ratio, this is more conservative or stricter measure. Okay? And then we have the cash flow from operations to current liabilities. Yung formula naman nito, cash flow from operations divided by the current liabilities. So this ratio helps address situations where the current ratio or quick ratio may not give the complete picture. So, in our module, it indicates that a healthy ratio is 40% or more. The important idea here is that we are looking at the company's actual cash generated from operations in relation to current liabilities. So, ang tanong dyan is gaano ba kalaki ang operating cash flow compared doon sa current obligations ng company. Okay? Next, we have the receivable turnover. So, for the receivable turnover, ang formula dyan is net credit sales divided by your average receivables. So, this ratio tells us about the efficiency of the company's credit and collection policies. If, for example, si customer, bumili siya on credit or nangutang, the company needs to collect those receivables, di ba? So, this ratio helps us evaluate like gaano ka-efficient are we to collect money from the customers, or in the perspective of a company, gaano ka-efficient yung company sa pag-collect ng mga utang. Nakuha nyo? A higher turnover generally indicates faster collection, but interpretation should still consider the company's credit policies and industry. Okay? Next, we discuss the age of receivables. So, this is related to receivable turnover. This measures the average number of days needed to collect receivables. So, ang formula dyan presented, there are actually two, diba? One formula is number of days in the year divided by receivable turnover, and then another approach is ending accounts receivable divided by average daily sales. So, ang concept dito is very simple. How many days, ilang araw ba will it take the company to collect the utang from the customers? So, for a business, faster collection can help improve their cash availability. Kasi syempre, kung mabilis yung pagbayad ng mga customers, merong available cash for the company na magagamit, di ba? Kaya kung masyadong matagal yung collection period, the management or the company may need to review its credit and collection policies. Okay? Kasi the companies don't want that kind of, di ba, na kailangan, na matagal bago nila nakukolek yung mga may utang sa kanila. Okay? Next is inventory turnover. So, inventory turnover It measures the company's relative control over its investment in inventory. So for finished goods, the formula there is cost of goods sold divided by average inventory. So the important question here is how many times does our inventory turn over during the period? So for example, if yung inventory turnover ay 5 times, it means yung average inventory investment is turned over approximately 5 times during that period. Pero again, the interpretation depends on the business. A grocery store and a furniture store will naturally have very different inventory turnover patterns. Kasi, syempre, ang grocery store, araw-araw may kita yan, di ba? But a furniture store, wala silang kita like everyday. Pero, mas malaki naman yung, once na na-collect nila yung pera or na tanggap nila yung pera from their customer, mas malaki siya compared sa isang grocery store. So, nakadepende pa rin yun sa business. Okay, next we have raw materials turnover. So for companies involved in manufacturing naman, we can also analyze raw materials turnover. The formula here is cost of raw materials used divided by average raw materials inventory. So this measures the relative control over investment in raw materials. In simple terms, gaano ka-efficient? How efficiently are we using and replenishing our raw materials? This is especially important for manufacturing companies kasi pag sobrang dami yung raw materials nila that can tie up dun sa kanilang cash, while too little can interrupt production. So kung kunwaring sobrang dami ng raw materials nila, and then hindi sila ganun kabilis mag-produce ng kanilang mga products, then makaka-apekto rin yon sa total sales nila. Or, if konti lang yung raw materials nila, kasi nga, wala silang ganun kadaming cash, then that will also affect doon sa production nila. Diba? Sa pag-manufacture nila ng mga products. Okay? Then we have days supply of inventory. Ayan. Tatapos na natin. So, days supply of inventory, this indicates the number of days that inventory is held for sale. So, yung formula dyan is 360 days divided by inventory turnover, or dalawang formula dyan, ending inventory divided by average daily cost of goods sold. So, if yung inventory turnover is mataas, the number of days inventory is held tends to be lower. So, kapag yung turnover is mataas, number of days ng inventory is mababa. Mas lower siya. In simple terms, inventory turnover tells us how many times, while yung days supply tells us how many days. Okay? Yun yung difference ng dalawang formula. Okay, next is the working capital turnover. Ang formula naman dyan is net sales divided by average working capital. So, ang working capital, this is generally your current assets minus your current liabilities. So, this ratio measures the adequacy and effective use of working capital. In other words, how effectively are we using our working capital to generate sales? This is important because too much working capital may mean resources are not being used efficiently, while too little may create liquidity problems. Okay? Next, we have current asset turnover. So, ang formula dyan is net sales divided by average current assets. So, this provides an indication of whether the amount invested in current assets is reasonable relative to the company's sales activity. So, in simple terms, gaano ba ka-efficient yung current assets ng isang company sa paggamit nila to generate sales. So, gaano ka-efficient yung company sa paggamit ng current assets nila para makapag-generate ng sales. So, yun ang current asset turnover. Okay? So now, let's move on sa ating mga long-term solvency formulas. Okay, so kung yung short-term solvency focuses on obligations that are due relatively soon, yung long-term solvency naman, it focuses on the company's ability to meet longer-term financial obligations. So this is especially important for creditors and lenders. Okay? The first ratio there is the debt ratio or debt to asset ratio. So, ang debt ratio, it measures the proportion of debt in the company's capital structure. For example, if ang total liabilities ng company ay 4 million pesos and yung total assets niya ay 10 million pesos. So, 4 million divided by 10 million, that's equal to 40%. This means yung 40% na yon of the company's assets are financed by liabilities. So, in simple terms, yung debt ratio na to, sinasagot niya yung tanong na how much of the company's assets are financed by creditors. Nakuha nyo? Gaano kalaki yung asset ng company na yun na yung nag-finance is yung mga creditors o yung mga pinangungutangan, yung mga creditor ng company na yun. Okay? Then we have debt to equity ratio. Ang formula naman natin dyan for debt to equity ratio is total liabilities divided by our shareholders' equity. So, this ratio compares resources provided by creditors with resources provided by owners. So, this also tells us about the company's financial leverage. In simple terms, ito yung sinasagot ng ratio na to. How much are we relying on creditors compared doon sa owners or mga investors? So, a company using more debt has greater leverage, yung mga gumagamit ng debt or utang. And leverage can help increase returns, but it also increases the financial risk. May risk pa din doon. So, students, you remember that debt is not automatically bad, ha? Debt is good din. Basta nagagamit siya ng maganda sa company. However, excessive debt can also increase the financial pressure on the company. Okay? Then we have cash flow from operations to total liabilities. So this ratio looks at operating cash flow in relation to liabilities. So dito sa module natin, it describes as helping overcome a limitation of ratios such as debt to equity because those ratios do not directly consider the availability of cash to cover debt. So in our module, it identifies that 20% or more cash flow from operations to liabilities as a healthy sign. So pag ang sagot nyo dyan is 20% or more, healthy siya. Again, ang important concept dito sa ratio na ito is, does the business generate enough operating cash relative to its liabilities? So, yun yung sinasagot niya na tanong. Next is times interest earned. So, for times interest earned, ito yung formula niya, yung EBIT, earnings before income tax, income before interest expense and taxes, divided by interest expense. Yun ang kanyang formula. So, yung EBIT, it means earnings before interest and taxes. So, this ratio measures the company's ability to meet its interest payments. So, for example, kung yung EBIT ng company is 1 million pesos and yung interest expense niya is 200,000 pesos, 1 million divided by 200,000 pesos, that's equal to 5 times. This means the company's earnings before interest and taxes are 5 times its interest expense. Ang pinaka-basic question na sinasagot ng ratio na ito is, kaya ba ng earnings ng company na bayaran ang kanyang interest expense? Okay? Iyon ang sinasagot ng ratio na yan. Next, we discuss times preferred dividends earned. So, this measures the adequacy of current earnings for paying preferred dividends. The formula presented in our module is net income divided by annual preferred dividend requirement. So, ang pinaka-purpose is to determine whether current earnings are sufficient to cover the company's preferred dividend obligations. Okay? Next is, saan na tayo? Operational efficiency. Ayan. So, sa operational efficiency, meron tayong 4 dyan na ratio. So, operational efficiency is about how well the company uses its resources to generate income. Hindi lang sapat na maraming assets yung isang company. Ang question dyan is, are these assets being used effectively? So, we have several ratios under this category. The first one is the gross margin ratio. So, ang kanyang formula is gross margin divided by net sales. So, it indicates the average markup available to cover selling and administrative expenses. For example, if the gross margin ratio is 40%, it means that 40% of net sales remains after considering cost of goods sold. So, this remaining amount, meaning, is available to cover other operating expenses and ultimately contribute doon sa profit ng company. So, sales minus cost of goods sold equals gross margin. Okay? Next is profit margin ratio. Ang formula natin dyan, net income divided by net sales. So, ang profit margin ratio, it measures the efficiency of earning net income from sales. So, for example, yung net income ng company is 100,000 pesos. Net sales ay 1 million pesos. So, 100,000 divided by 1 million, that is equals 10%. That means the company earns 0.10 pesos of net income for every 1 peso of sales. So, in simple terms, yung ratio na to, sinasagot niya yung tanong na out of every peso of sales, how much becomes net income? Okay? Next, we have return on total assets. So, ang formula dyan is net income plus interest expense divided by average total assets. So, this ratio measures the productivity of assets in generating income. So, think of the assets as the resources available to the company. So, ang question dito is, gaano ba ka-productive yung mga assets na to? So, if the company the company has a lot of assets but generates very little income, its return on assets may be relatively low. So, students don't simply ask like how many assets does the company have. Dapat ang itatanong dyan is how well are those assets generating income. Okay? So, that is return on total assets. Next, we have asset turnover ratio. Ang formula natin dyan is net sales divided by average total assets. So, asset turnover ratio, it measures how efficiently assets are used to create sales. So, for example, yung asset turnover natin is 2. That means that the company generates approximately 2 pesos of sales for every 1 peso invested in average total assets. So, again, this is about efficiency. Ang distinction niya is asset turnover, it focuses on sales generated from assets, while return on assets focuses on income generated from assets. So, magkaiba yung sales at income, di ba? Yung sales is hindi pa na-deduct dyan or na-minus yung mga expenses. Well, the income is, yun na yung, it could be like before, income before interest and taxes, or it could be like after deducting the interest and taxes. Okay? Then we have profitability ratios. Ilan ang ating ratio dyan? 1, 2, 3, 6. Meron tayong 6 na ratios under the profitability. So, ang profitability ratios, these answer a very important question. Is the company generating satisfactory returns? So, this is particularly important to owners and potential investors. Ito yung mga gustong malaman ng mga owners tsaka potential investors. Profitable ba yung company or not? So, paano nila makikita yon? Using these ratios. The first one is ROI, or return on investment. Ito yung pinaka-common. So, ang formula dyan is net income divided by the investment. So, it measures the return to owners and potential investors on their investment. So, if for example, if nag-invest ka sa company na yun ng 100,000 pesos and nag-earn ka ng 10,000 pesos, meaning yung ROI mo is 10%. 10,000 divided by 100,000 is 10%. This is a very familiar concept even in personal finance. Kapag nag-invest tayo, ang lagi nating gustong malaman is magkano bang kikitain ko dyan relative to the amount na i-invest ko or ilalagay sa company na yan. So that is ROI. Next is we have return on common stockholders' equity. Ang formula naman dyan is net income minus preferred dividends divided by average common stockholders' equity. So this ratio focuses specifically on the return attributable to common stockholders. Why do we deduct preferred dividends? Because we want to determine the income attributable to common shareholders. So the question becomes, what return are common shareholders earning on their investment? Magkano ba yung return na na-earn ng mga common shareholders doon sa investment nila? Okay? So, yun ang return on common stockholders' equity. Next is earnings per share or what we call EPS. Ang formula naman dyan is net income minus preferred dividends divided by number of common shares outstanding. So, this is another very important investment ratio. So, EPS measures the amount of earnings attributable to each common share. For example, if yung income na available sa common shareholders is 1 million pesos and there are 100,000 common shares, yung ating EPS dyan ay paano natin i-compute? 1 million divided by 100,000 is equal to 10 peso na EPS. So, approximately 10 pesos of earnings is attributable to each common share. This is important to investors because it helps them evaluate the company's earnings on a per-share basis. Okay? Next is the price-earnings ratio. The price-earnings ratio naman, or the P/E ratio, shows the relationship between the market price of a common share and its earnings per share. So, for example, if the market price is 50 pesos and the EPS is 5 pesos, then your price-earnings ratio is 10 times. 50 divided by 5, that is 10 times. So, investors are paying 10 pesos in market price for every 1 peso of earnings per share. So, sa module natin, it describes this ratio as indicating the relationship of the market price of the common stock to net earnings. Okay? Next is payout ratio to common. So, this measures the portion of net income attributable to common shareholders that is paid out as dividends. So, ang isang formula dyan is common dividends divided by the difference from net income minus preferred dividends. Another equivalent approach presented in our module is dividends per share divided by our earnings per share. So, if a company has a 40% payout ratio, approximately 40% of the income available to common shareholders is distributed as dividends. So, the remaining amount can be retained by the company. Okay? Next is dividend yield. Dividend yield on common stock measures the cash flow return on common stock investment. Ang formula dyan is dividend per common share divided by market price per common share. So, this tells investors how much dividend income they are receiving relative to the market price of the stock. So, this is particularly relevant. Importante siya for investors who are interested in dividend income. Okay? Next, we have the investment analysis. Dito na tayo sa baba. Ayan. So, for the investment analysis, this section focuses on the resources provided by stockholders and creditors and the value attributable to common shares. So, meron tayong tatlong ratios dyan. First, we have the equity ratio. Ang kanyang formula is stockholders' equity divided by total assets. So this measures the total investment provided by stockholders. If yung equity ratio is 60%, for example, it means that 60% of the company's assets are financed by stockholders' equity. So in simple terms, how much of the company's resources are funded by the owners. So yun ang equity ratio. Next, we have the creditors' equity to total assets. So ang formula natin dyan is total liabilities divided by the total assets. So this ratio measures the amount of resources provided by creditors. So we can compare, ang equity ratio is yung contribution ng owners, while the creditors' equity to total assets, this is the creditors' contribution. So together, using these two ratios, this will help us understand how the company's assets are financed. So, paano pinifinance yung mga assets ng company using the owner's contribution and the creditor's contribution. Okay, next we have the book value per share. So, ang formula dyan is common stockholders' equity divided by number of common shares outstanding. So, yung book value per share, this measures the net assets applicable to each common share. So, in simple terms, based on the company's accounting records, how much net asset value is attributable to each common share. So, huwag kayong ma-confuse doon sa market price. Market price is different. So, yung book value, this is based on accounting information. While yung market price, this is what the market is currently willing to pay. Yun ang difference nila ng book value tsaka market price. So, there are two different concepts here. And then, other financial ratios, discuss din natin. So, first is the return on average current assets. So, this measures the return generated from average current assets. Next, we have the plant asset turnover. Sa plant asset turnover naman, this measures the relationship between sales and investment in plant, property, and equipment. And finally, we have the leverage ratio. So this measures the relationship between investment in total assets and the investment provided by owners. So these ratios provide additional perspectives when evaluating a company's financial condition and efficiency. Okay? Okay. So, to summarize our lesson, financial statement analysis is concerned with analyzing the balance sheet and income statement and interpreting financial ratios for financial representation, business evaluation, and financial forecasting. So, what should we remember? First, we remember that financial statements contain the data. Second, analysis gives meaning to that data. And third, ratios allow us to compare relationships between financial figures. And lastly, fourth, we should not interpret a ratio in isolation. We need to understand the business, and then we compare the periods and consider other relevant information. Again, don't just memorize na current ratio is equal to this or current ratio equals this. Instead, we ask, what question does the current ratio answer? So the answer is, can the company meet its current obligations using current assets? So that mindset, we will make ratio analysis much easier. Okay? So, okay, I hope you understand now that financial analysis is not just simply about solving formulas. It is about using financial information to answer important business questions. Okay? So, always remember our major areas, the short-term solvency, long-term solvency, operational efficiency, profitability, and investment analysis. So, those different areas answer different questions. For short-term solvency, can the company pay its short-term obligations? For long-term solvency, can the company handle its long-term financial commitments? And then for operational efficiency, is the company using its resources effectively? And then profitability, is the company generating satisfactory returns? And lastly, for investment analysis, what do the financial figures tell owners, creditors, and investors? Okay? So, thank you for listening, and yeah, hopefully we can meet soon in our class. So that's it. Thank you for listening.